This might be the most important video that you must watch as a trader. If you want to become successful at trading, you have to master how to trade Japanese candlesticks, no cap. By the end of this course, you will be able to learn everything you need to know about trading Japanese candlesticks from A to Z. And this course is suitable for everyone, be it for beginners who know absolutely nothing about trading or for advanced traders who want to push their trading to the next level. You are all welcome here. You will all learn something. So this class is split into 4 parts. Part 1, I'm going to teach you how to read and understand candlesticks. So this is like the basic, the foundation that you must get it right. And then part 2 is how to trade these candlesticks on the charts. After you have understood how to read and how to understand candlesticks, you must learn how to actually trade them on the charts, how to actually analyze them. And then we're going to move on to part 3 and 4, which we talk about the best candlestick patterns that you must use to profit from this market. These are literally the candlestick patterns that made me over 6 figures trading, and I'm giving it to you for free. Let's get started. So there are 2 types of Japanese candlesticks, your bearish candle and your bullish candle. So bullish candle means price is going up, and bearish candle means price is going down. So this one is going up. So basically, this rectangle right here is what we call the candlestick body, and these 2 things right here is what we call the wicks. Alright, candlestick body and candlestick wicks. So when you look at this is the open price and this is the closing price. So you can see a bullish candle will close above where it opened, right? Because price is going up. That's why it will close above where it opened. And then this is what we call the highest point price went to. And then this is the lowest point price went to when this candle is formed. And then as you can see, the bearish candle opened above but it closed below because price got pushed all the way down by sellers. So once again, this is the same thing, high and low, lowest point price went to and highest point price went to. And then like I said, this is your upper wick and this is your lower wick and upper wick, or you can call them upper shadow or lower shadow. It really does not matter. Next, you guys must understand buying and selling pressure. If you can understand this, you do not need to memorize any candlestick patterns, because if you can understand this, you can understand why candlesticks form the way they do. So you can see like this is what we call the selling pressure, because at some point of time, price literally went all the way up here. This is the high, and then it got pushed all the way back down and it ended up closing right here. It closed right here. So this is what we call the selling pressure, because at some point of time price got pushed literally all the way up here, but then it got pushed all the way back down. On the other hand, if the candlestick look like this, you can see like this is the buying pressure. Alright guys, buying pressure, which means right at some point of time price literally got pushed all the way down here guys, so low, forming this is what we call the lowest point price went to, before it got pushed all the way back up and end up closing right here. Get it guys, it's really just as simple as that. This is your selling pressure and this is your buying pressure. So basically when you see this candlestick, whether it is green or red, that means that buyers are coming into the market and pushing the price up. So price should continue going up and form like some sort of like up candlestick like this. And then if you see this candlestick right here, that means that sellers are coming into this market and pushing the price down. So the next candlestick could be like some sort of red candlestick pushing the price all the way down. So example, when you see this candlestick at a resistance area, this is your resistance area. What does it mean guys? It means that sellers are coming into this market and pushing the price down. So we should enter for a sell. And after we enter for a sell, you should see like some sort of like red candlesticks being formed right here, like this, pushing the price all the way down. So basically, if you guys see a candlestick that have like a long upper wick like this, it means that it is bearish and price is about to go down. However, if you see a candlestick with a long lower wick like this, it means it is bullish and price is about to head up. One key thing to note is that it really does not matter what color of these candlesticks are. It doesn't matter if this is green or red. As long as it has a long lower wick, it is bullish. As long as it has a long upper wick, it is bearish. Alright. Next, I want you guys to compare these 2 candlesticks right here. you can see this candlestick has a longer body, right? While this one has a shorter body. So what does this mean? This means that this candlestick has more buying pressure, alright? There is more buying pressure because this candlestick has a longer body, and then the longer body, that means there is more volume, more buyers, and more momentum in the market. So I want you guys to note that the longer the body, the stronger the buying or selling pressure. So if you see like a long candlestick like this compared to a short candlestick like this, obviously this one have more power, right? Like more volume inside the market. There is more momentum compared to this small little boy right here. That's why make sure you guys pay attention to like the length of the candlestick body. It really tells you guys a lot of story and tells you everything you need to know about price currently. Next, if the candlestick body does not have a wick at all like this, like you can see it does not have like a lower or upper wick, none of that, it's just a candlestick body, right? This means that there is extremely strong buying or selling pressure. So if you see this green candlestick right here with no upper or lower wick, that means it's very strong buying pressure and price is going to continue going up. And on the other hand, when you see this red candlestick with no upper or lower wick, right, that means there is a lot of selling pressure and price is going to head down. Next, I got a really important tip to show you guys. If you guys can understand this, it's really a game changer. Alright, so firstly, you need to watch the momentum of the candlesticks. So what I mean by that is that you guys need to look at the length of the candlesticks, alright? Like you can see, this is a big candlestick, this is a medium candlestick, and then this is a small little candlestick, right? So by looking at like the size of these candlesticks, it tells us the momentum of the candlesticks itself. So this big red candlestick tells us that there is a lot of downward momentum. And then followed by this one, it shows us that, okay, momentum is kind of slowing down a little bit because the candlesticks are getting a little bit smaller. And then look at this. This means that there is very little momentum. So there is not much sellers continue to push the price down. So when you see this approaching a support level, like a key little support level right here, guess what? Enter for a buy because this shows us that the sellers are losing momentum. Sellers are losing momentum. So if you enter for a buy, you'll probably see like price starts to make some green candlesticks and go up like this. So by watching the momentum, you are able to see like this bearish move is actually weakening. It's getting weaker and weaker. And then the buyers are going to take over and surpass these little sellers. So if you guys know how to watch the momentum, you will see that, okay, the sellers are getting smaller and smaller and the sellers are going away. So the buyers might come in to push the price out, right? You have gotten in right here for a buy and then you will see price going up. Guys, the longer the wick, that means there is an increase in change in market sentiment. So if you recall just now, I mentioned that the longer the lower wick, it means that the buyers are pushing the price up. So what this means is that the downtrend is actually losing strength, guys, losing strength. So when you see this long lower wick, right, chances are the next candlestick will be some sort of like green candlestick that is like pushing the price up. And then when you see a candlestick with a long upper wick like this, it means that the uptrend is losing strength and price is about to head back down.
Now that you have understood how to read candlestick patterns and what all this candlestick means, you have to learn how to apply them onto the charts. And that is what I'm going to teach you in the next part of this lesson, which is basically how to analyze candlesticks like a professional trader. What you're about to learn is about to blow your mind.
I'm going to show you everything you need to know about trading candlestick patterns from beginning till the end. Let's get right into it. Focus on candlesticks at key level. Do not look at every single candlestick at every single time frame. You should only be paying attention to the candlesticks at a certain key level or a trend line, like when it is near a key level or a trend line. So honestly, my advice to you guys would be, do not pay attention to the candlesticks in the middle. Only like really focus on the candlesticks that are forming near a key level like this right here. Because you do not want to get in the middle of nowhere, alright? Do not get into the trade in the middle of nowhere. So let's say if you get in for a buy like somewhere around here, your stop loss is below here, and then you'll take profit at this key level, then guess what? That is a 1 risk to reward ratio, and that's not worth it. On the other hand, if you get in at a key level, so you get in like somewhere around here for a sell position, your stop loss, you'll place it above this resistance level, take profit at the next, and you can see it is a much better risk to reward ratio. That is why I will always advise you guys to only really focus on the candlesticks at a key level. Like look out for some sort of reversal candlesticks being formed at like a very strong support and resistance level, and then that will show you that price is about to reverse and you can trade in that direction. Like example, in this case, price has already made like a huge move. Like this is where price currently is, and you do not want to get in here, guys. What you want to do is to wait for price to get up to this next key level, and then look at the candlesticks that is forming at this key level before you decide whether you want to go in for a buy or a sell. So right now, it's still wait, and you can see like price is going up to this key level, and then when price is up at this key level, then you can focus on the candlesticks that is being formed here. Like is price showing you that price is like reversing, or is it like showing you that there's a lot of momentum and it's like breaking past this key level? Prioritize higher time frames over lower time frames. You guys need to get confirmation on the higher time frames like the 1 hour and the 4 hour first. So guys, do not focus too much on the 5-minute or the 15-minute candlesticks. Alright, you guys should always prioritize the higher time frames, because on the lower time frame there is a lot of noise. So candlestick patterns are much less effective on the 5-minute or even the 15-minute time frame. So right now we are on the 5-minute time frame, and you can see price did like a little tweezer bottom right here. You can see this one red candle, one green candle, and it's supposed to be like reverse when you see this pattern, right? But guess what? Price continued going down even further. That is because on the 5-minute or the 15-minute time frame, the lower the time frame, the less effective the candlestick patterns are. So in this example, you saw like this little doji being formed at this resistance area. So after getting confirmation on the higher time frames, you should scale down to the lower time frame like the 15-minute time frame to look for your entries. So if you guys went down to the 15-minute time frame, you will see like price did like a huge pin bar right here. You can see this super long wick. Price got pushed all the way up here, but then sellers come in to push the price all the way down here, and they end up closing at this like long wick candle. So this was like the doji that price gave us just now. So this is a major confirmation for us to enter for a sell position. So as you can see, if you enter for a sell position, you will have been in a whole lot of profit. And if you enter on a 15-minute time frame, your stop loss will be like so tight. Like this is your stop loss, like a 20 pip stop loss, compared to entering on like the daily or the 4-hour time frame. Next, you have to combine candlesticks with other forms of technical analysis. You cannot just rely on candlesticks patterns alone. You need to have other confirmations or confluences. So make sure you combine your candlesticks with other forms of technical analysis like key levels, or even moving average crossover, or trend lines, or Fibonacci. Basically use all the tools in your technical analysis arsenal to give you as much confirmation as possible for your trade, so that you have the confidence to hold the trade much longer. So example, in this case, price is at a resistance level, so we should be looking to sell, right? So that is the first confluence. And then the second confluence could be price broke out of this trend line right here. This is when price broke out of this trend line. So the third confluence could be some sort of moving average crossover, which we are going to go down to the smaller time frame like the 1 hour and see. You can see like right here, this is when the red line has crossed over the blue line, right? You can see the red line is above the blue line now. So this is your 3 confluences. Alright, so the fourth confluence could be like this long wick doji right here. You can see like this super long wick doji being formed right here. This shows us that there is a lot of uncertainty in the market, and the market is indecisive, and the market might be about to reverse because the buying pressure is all gone. Now it's the seller's market, so we can enter for our sell position somewhere around here when the moving average crossover, and we have your 4 confluence. So stop loss placed above this resistance area, and then a take profit can be placed at like the next support area, which can be right down here. And as you can see, this was like a beautiful trade, guys. played out just like what we expect it to play out. So another tip for you guys would be to compare the size of the candlestick body to the wick. So you can see like here we have two examples. This candlestick have like a big and long body, but it has very short wick, while this candlestick has a very short and small body but has a super long wick. So which one do you think have more momentum, like more volume? Obviously this one right here, right? Because this big candlestick body show us that there is a lot of buyers in the market, a lot of momentum pushing the price up. So if the candlestick has a very short wick, like this very short wick, compared to the body, you can see big body, small wick, it means there is a lot of momentum. So on the other hand, if it has like a super long wick like this, you can see two long wicks right here, but it has a very short body, it means there is not much momentum. So the less wick you see, the more confirmation the trade is going in that way. So once you see like this candlestick with like a big green body but a small wick, right, most likely the next candlestick will be like some sort of green candlestick like this. So here's a very good example. You can see this candlestick has like a super long body but very short wick, right? So you can see what price did after it formed this candlestick. It continued going up even further because there is a lot of momentum. While on the other hand, look at this candlestick. This candlestick has a very small body, very short body compared to the wick. It has a very long wick but a very short body, and after price printed this candlestick, look at what price did. It went down, right? So candlesticks really tell us a lot of story. Like, tells us the momentum of the market, like is there more buyers or more sellers in this market. I used to think that you have to memorize all the candlestick patterns to become successful at trading, but the truth is you do not need to memorize all the candlestick patterns. In fact, you only need to memorize 3 candlestick patterns. For me, my 3 favorite candlestick patterns is the bullish engulfing and the bearish engulfing, and then there is the morning star and the evening star, and then your third one would be the doji. Alright, so these 3 are my favorite candlestick patterns that I only memorize. So if you ask me about like other candlesticks like this, I do not know what is that. Alright, so that is the unfiltered truth. You only need to memorize 3 candlestick patterns. So my advice would be to figure out what candlestick patterns you love and go from there. So you really don't have to know like 100 candlestick patterns. It all depends on what you like and what works for you. When price is at a key level, do not enter yet. You cannot assume that price is gonna break past this key level or reverse immediately at the key level. So price can literally consolidate for a little bit before price decide whether it wants to reverse or break the key level. So be patient, do not chase the trade and react to the market. So if price is like consolidating like this, what I will personally do is that stay out of the market. I will stay out of the market and I will wait for price to like show me some sort of candlestick patterns that tell me that price is either breaking past this level or is reversing at this level. Then I enter for the trade. Like example, like right here, I still will not enter because price is consolidating and there is not much sign that show us that price is reversing or breaking past this key level. So we will still wait, and you can see right here, price gave us this big bearish engulfing candlestick, just rejecting this key resistance level, and you can see this shows us that we should enter for a sell position. So if you enter for a sell position here, your stop loss will be above here, and then you can place your take profit at the next key level, and you can see price just continue dropping. So that is why you guys must always be patient and react to the market. Do not just like enter for a sell position immediately because price is at a resistance level. Remember, price can do whatever you want. Price do not care about you. So price can break past this level or reverse at this key level even after consolidation. If you do not like to stare at charts all day just like me, what you can do is to set alerts at key levels when you are analyzing the charts. So let's say in this example, I want to set an alert at this key level right here. So basically, I want to analyze the charts when price is at this key level here. So what I will do is to press this alert right here and then change the figure to 1.05, 1.05. So you can put like analyze Euro USD or something and then click save, and then you see there will be like this orange dotted line being formed right here. So basically when price come here to touch this level, TradingView will literally like send you like a message or an email telling you that, okay, right now Euro USD is at this level. So when you get the message, you can open up your device, whether it is your laptop or your phone, and see what the next few candles are formed at this key level. Like, is price like reversing and heading back up, or is price gonna break past this key level? And then you can trade from there. So that is a tip that you guys can use to save a lot of time. Take profit, stop loss, risk to reward ratio, and the lot size that you use should be as important as your entries. You can literally have like the best entries in the world, but if you do not practice proper risk management, you will not make money in this market. So make sure you guys prioritize risk management on the same level as your entries. Do not just focus on technical analysis and getting like the best entries possible. Focus on risk management too. Protect your account, protect yourself, protect your money so that you can make the most amount of money in the long term. Number 1 is your 3-line strike candlestick pattern. The 3-line strike candlestick pattern is basically 3 subsequent candles in a certain direction and then an engulfing candle in the opposite direction. So this candlestick pattern does not work 100% of the time, so make sure you watch out for other confluences before you enter for the trade. And the first thing you need to do when you look at this pattern is you want to look out for the overall trend first, right? If the overall trend is an uptrend, then it will be 3 red candlestick followed by 1 bullish engulfing candlestick. And then if the overall trend is downtrend, then it will be 3 little bullish candlestick, 3 little green candlestick, and then 1 huge bearish engulfing candlestick, and then you can sell it down. I'm going to show you on the charts in a minute. So the 3-line strike candlestick pattern is basically a continuation candlestick pattern. This means that when you see this candlestick pattern, that means that the trend is going to continue. So if you see this in a downtrend, it's going to continue going down. And if you see your 3-line strike pattern in an uptrend, it's going to continue to go up. So you should enter for the continuation of the trend, of the overall trend, right? So the first thing we need to do is to look at the overall trend first, right? Like right now, as you can see, it is on a downtrend. Price is making your lower highs, lower lows, right? That is why that is on a downtrend. So you should look out for this candlestick, this 3-line strike candlestick pattern as a continuation of the downtrend, and that should be your signal to sell. All right. So once you see this candlestick pattern over here, you can enter for a sell, right? Enter for a sell here. Your stop loss above this candlestick here, and then I'll take profit all the way down at the next support level, the next key level. And as you can see, this is the 3-line strike candlestick pattern because what does it do? It has 1 small green candlestick body and then followed by 2 green candlestick, very small candlestick, and then the red one is just a bearish engulfing candlestick. It pretty much just engulfed everybody here. You see all these little candlestick, and then this huge red candlestick just eats everybody. Number 2 is your multiple candle rejections. So this pattern is very common on GBP, JPY. So how it works is basically that when at a key level, right, you should spot this multiple candle rejections at a certain key level, be it a support level or a resistance level. So you can see how like multiple candlesticks, they reaches to this key level and then they get rejected, they get wick back down, right? Wick back down, wick back down. That is what it means to be multiple candle rejections. And that basically means that more than 1 candlestick is rejecting a key level. And this pattern shows that price tried to push through the level over and over again, but it failed. That's why you have all these multiple long wick candlesticks that's forming. Right now you can see how price is at a major resistance level, right? And you can see how candlesticks tell you a story, guys. Candlesticks giving you signals that whether price is gonna reverse and head back down, or is it going to break past the key level. You can see over here when price reached this key level, you can see what the price do. Price went up all the way, wick back down, forming this wick here. Same thing over here. Price got pushed all the way up here and then wick back down, and over here wick back down, wick back down, wick back down, right? And you can see how the candlesticks are rejecting that key level, and that shows us that price might not be breaking past this key level. It might be coming down, so we should look for sell. And how you can enter for this is once price done this entire consolidation over here is going sideways, right? You can enter on the breakout of this entire consolidation. Maybe you can enter over here when price did this huge red candlestick pattern, right? And that just shows you that price is not breaking past this level. First sign was this multiple weak rejections over here, multiple rejections over here, price just rejecting this key level. And then the second sign could be this huge bearish engulfing candlestick, so you can enter for the short position over here, and then your stop loss can be above this resistance level, take profit all the way down at the next support level. So here's another example. You can see how price is at this major support level, and right now whenever price is at a key level, we want to see what the candlesticks are showing us, right? Is it going to break past that level, or is it going to bounce back up and hit all the way back up and reverse, right? And as you can see over here, there is multiple candlestick rejections once again. Price got pushed all the way down, and then what does it do? Wick all the way back up. Same thing here, wick all the way back up, wick, 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 wick. Multiple candle rejections, multiple wicks. This just shows us that price is rejecting this support level and price might be reversing head back up. Once again, we want to enter on this breakout of this entire consolidation. Once it broke out over here, you can enter over here, and your stop loss below this support level, and then your take profit can be at the next resistance level, right? At the next resistance level. And that is how you can trade the multiple candle rejections pattern. Number 3 is your morning star and your evening star. These are one of my most favorite candlestick patterns because they work like, I would say, 90% of the time. Alright, the morning star is a bullish 3 candlestick pattern that shows us that price is potentially at the bottom of a downtrend, and this means that price is about to reverse and hit back up in the opposite direction. Okay, so the first candle must be red, and then the second one can be either green or red, and it can be either a star candlestick or a doji. Alright, and then the third candlestick must be green, and it must close at least halfway up the first red candlestick. And then this last candlestick will confirm to us that a reversal is going to occur. And then when you see your evening star, that means that the uptrend is potentially going to end and price is about to reverse and hit back down. So you should look out for these 2 candlestick patterns at a key level. When price is at a major support or resistance level, if you see a morning star at a resistance level, that means that price is not breaking past the level and it is more likely to reverse and come back down. So right now you can see there is a clear as day resistance area around here, right? You look to the left and you see this very strong resistance area. Whenever price hit all the way back up, come back down, hit all the way back up, come back down. So you should be looking for price to either break this level or coming back down, right? So right now, what did price do at this key level? Like I said, you have to really focus and pay attention to the candlestick patterns that are forming at a key level. That will show you whether price is reversing or breaking past it. So you can see over here, price did evening star at a key level. Evening star is your reversal candlestick pattern, right? This means that price is not breaking past this key level. It is reversing and heading back down. So enter for a sell right after this candlestick is formed, enter for a sell here, and now stop loss above the resistance area, take profit all the way down at the next support level right here, and you can see this trade just played out perfectly. And over here you can see how price is at this support level, right? And once again, what did price do? Is it breaking past it or is it not breaking past it? You can see how price did this morning star, guys. Like I said, one red candlestick body followed by either a star or a doji, and you can see this is somewhat of a star or a doji, and then followed by a green candlestick pattern. Evening star, clear as day, enter for a buy right now, enter over here, stop loss below this support level, take profit at the resistance level that we have drawn, and you can see this trade just played out perfectly. And guys, look at this, guys. candlestick patterns are always gonna be there, alright? It's just historical price patterns and it's repeating itself over and over again. History repeats itself over and over again. That's why it is so important to really remember all these candlestick patterns, because once they show up, right, you can take action, enter for either buy or sell depending on that particular candlestick pattern. Number 4 is your Maribozu candlestick. Alright, a Maribozu is basically a long candlestick with no wick, so it doesn't have the upper and lower wick at all. It is just one huge candlestick body. It basically looks like a vertical rectangle. And when you see a green Maribozu candlestick, this means that during the session, the candlestick opened at the lowest price and closed at the highest price. So this means that the buyers pretty much maintain control of the price throughout the entire session. And this also means that there is a lot of momentum. So a green Maribozu candle would mean that there is a lot of buying pressure. And the unique thing about this candlestick pattern is that it can be used as both a reversal candlestick pattern and also a continuation candlestick pattern. If you see a green Maribozu in an uptrend, the uptrend is going to continue. And if you see a green Maribozu in a downtrend, this means that price is about to reverse. The opposite is true for your red Maribozu. If you see a red Maribozu in an uptrend, price is reversing. If you see a red Maribozu in a downtrend, price is going to continue to go down. So right now there is a very clean Maribozu candlestick over here. You can see like this is somewhat of a key resistance level, right? And then when price imprinted this huge red candlestick body, and you can see there is little to no wick. There is just a very short wick, and I don't think you can even see it, but it's very small wick, very small wick on top, and it's just a huge red body. This shows us that there is a lot of selling pressure, so much selling pressure, so you should enter for a sell, right? Enter for a sell once this candlestick form. Stop loss above here, above this resistance level, take profit all the way down at the next support level. So right now you can see on the screen that is somewhat of a Maribozu candlestick. You can see there's this very short upper wick and the lower wick is quite short either, and you can just see like how big the entire body is. Look at all these small little candlesticks, small little boys, and then the big boy enter the chat, and then big boy enter the chat, enter for a buy, right? You can see there's so much buying pressure, and this shows that price is continuing going to head back up. And then our stop loss can be below the candlestick over here, and then take profit all the way up at the next key level. Last but not least, we have the 3 white soldiers and the 3 black crows. The 3 white soldiers is a bullish reversal pattern that consists of 3 consecutive green bodies, each with a higher close. So you can see how over here, the 3 white soldiers, each one close at a higher price compared to the previous one, right? Like you see this one close higher than this one. This one close higher than this one. So you can see how the soldiers are like marching upwards as the price climbs higher and higher. So this pattern shows that the downtrend is ending and price is going to reverse, just like the Morningstar candlestick pattern. So you should watch out for your 3 white soldiers in a downtrend and also at a key support level. And you should watch out for your 3 black crows at a resistance level. And this means that price is going to reverse and head back down. Over here, once again guys, price is at this key level, and what did price do? Your 3 black crows, right? This shows us that price is heading back down. Enter for a sell once again, stop loss above here, take profit all the way down here, right? Once again over here, you can see how price is at this support level, and price did your 3 white soldiers, guys. You see how each candlestick is closing higher than the other. This one close above this one close above this one. This shows us that price is heading back up, right? Price heading back up. Enter for a buy here, stop loss below this support level, take profit at the next resistance level over here, and you can see this trade pretty much played out perfectly. So these are the 5 reliable and profitable candlestick patterns that you guys need to know. Number 1, your 3-line strike candlestick pattern. Number 2, your Morningstar or Evening Star. Number 3, your Maribozu candlestick. Number 4, your multiple candle rejections. And number 5 is your 3 white soldiers and 3 black crows.
in this video, I'm going to show you this candlestick pattern that will allow you to get sniper entries. So this candlestick pattern is called your 3-line strike candlestick pattern. So it basically consists of 3 small green candlesticks, each one closing higher than the previous candle. As you can see over here, this second candle closed higher than the previous candle, and the third candle closed higher than the previous candle. And then it followed by a huge red engulfing candlestick pattern. So new traders will look at all these green candlesticks and get in for the buy, right? They get in for the buy because they see price is gonna go up. Happy, get in for the buy. And then followed by a huge red engulfing candlestick, which pretty much just wipe out their gains. That's why it is important to be patient and wait for a confirmation before you enter for that trade. So the opposite is basically 3 red candlesticks, each one closing lower than the previous candle, followed by a huge green engulfing candlestick. So this 3-line strike candlestick pattern basically shows us that there is a lot of selling pressure in the market. Let me give you an example. So the first thing you need to do is to look at the overall trend. Is it an uptrend or is it a downtrend? Here's an example on GJ. You can see clear as day that price is making a downtrend. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Alright, so this is in a downtrend. So in a downtrend, you should be looking for this 3-line strike candlestick pattern. And in an uptrend, you should be looking for this 3-line strike candlestick pattern. So once again, the second candlestick closes higher than the previous candle, and the third candlestick closes higher than the previous candle, and then followed by a huge bearish engulfing candlestick, which pretty much just like wipe out the entire buyers, wipe out all the buyers, and now the sellers have taken over. So this shows us that price might be continuing to go down. The retracement is done, so enter for a sell right here, stop loss above the bearish engulfing candlestick, and then take profit at the next support level or the next key level. So you can see how this candlestick pattern is very common on GJ, right? Once again, 3 small green candlesticks followed by a huge big ass red candle, which pretty much just engulf all these small little green candlesticks. So over here, when price starts to retrace to create your new lower high in a downtrend, and it creates what? Your 3-line strike again. Enter right here, because we know that the trend is going to continue. The retracement is done. So you enter here, stop loss once again above the engulfing candlestick, take profit all the way down at the next key support level. Here's an example on the uptrend. Small red candlestick, small red candlestick, small red candlestick, followed by a huge bullish engulfing candlestick right here. So enter for a buy, and then stop loss will be below this support area here. Take profit all the way up to the next key level. So you can pretty much see how effective this candlestick pattern is, right? But just to be clear, this candlestick might not work 100% of the time, alright? I don't think any candlestick patterns will work 100% of the time. That's why it is so important to make sure that you have other confluences before you enter for that trade. Like I said in all my videos, make sure you have at least 3 confluences before you enter for the trade. So this candlestick pattern can be one confluence. Your other confluence can be your moving average, like I have right here, your Fibonacci, your support or resistance, your trend lines, whatever. Just make sure you have at least 3 confluences before you enter for the trade.
Now that you have understood how to trade candlesticks, the next thing you must learn how to trade is support and resistance levels. And I literally give you a complete guide right here. So click on this video right here to find out more. If you have learned something from this class, make sure you smash the like button and hit on that subscribe button. Welcome to the tribe, and remember, you're just one trade away. Mwah.